Hello everyone. Welcome back to another monthly update for the SOXL challenge. It's Saturday morning, November 22nd, 2025. SOXL closed yesterday at $32, that's a significant downturn from last month's $40. This has been quite the roller coaster year for us. We saw SOXL peak at $36 back on January 22nd, 2025, then that brutal crash down to $7 on April 7th, 2025. The recovery really kicked into gear, and SOXL even went up to $50 on October 29, 2025. But SOXL plunged from $50 to $28 yesterday, before recovering to $32 yesterday. This decline of about 40% from the peak price of $50 is due to AI bubble concerns, weakness in tech stocks, and investor anxiety over economic data. Let's examine the SOXX daily chart in detail. SOXX is currently positioned near $272. For those new to the channel, SOXL is a triple leveraged ETF that magnifies the daily movements of SOXX, which tracks leading U.S. semiconductor companies. As of yesterday's close, SOXX is maintaining its position below the SMA 50 purple line, but above the SMA 200 green line. To be more specific, SOXX broke above the SMA 50 purple line on May 6, 2025, and successfully cleared the SMA 200 green line on June 4, 2025. On September 18, 2025, SOXX hit a brand new all-time high of $268, surpassing the previous record of $267 from July 11, 2024. Then, SOXX hit a new all-time high price of $312 on October 29, but it went down to $260 yesterday, before recovering to $272 yesterday. It was good to see that SOXX was able to rebound near the previous record of $267 from July 11, 2024. Usually, a previous peak can act as a support line in a strong market. We witnessed a golden cross formation on July 8, 2025, when the SMA 50 purple line crossed above the SMA 200 green line. The previous golden cross occurred back in January 2023. Following that signal, SOXX embarked on an incredible 18-month rally that culminated in a July 2024 all-time high of $267. If history repeats, we still have potentially 14 months of upside ahead of us. There's one more technical element I want to highlight, the SMA 20 black line. This faster-moving average reflects short-term momentum. SOXX had been trading above the SMA 20 black line for 3 consecutive months starting April 24, 2025, which signaled bullish strength. However, SOXX slipped below the SMA 20 black line 5 times in August 2025, first in early August, second on August 20th, third in early September, fourth on November 7th, and fifth since November 13th. Even in early September 2025, SOXX dipped below the SMA 50 purple line for 3 days, but SOXX was able to rebound above both the SMA 50 purple line and the SMA 20 black line. Since November 13, SOXX is trading well below both the SMA 20 black line and the SMA 50 purple line. Moving into December 2025, it will be crucial to monitor whether SOXX can maintain its position above the SMA 50 purple line or, at minimum, find support and bounce from the SMA 200 green line. Now let's review why semiconductor stocks and Nasdaq plunged for the past 3 weeks. The Nasdaq's decline in November was driven by AI valuation worries, tech sector weakness, and mixed economic signals. Investors grew increasingly skeptical about the sustainability of the AI-driven rally. Nvidia posted strong Q3 results, but enthusiasm faded within 24 hours as traders worry valuations were stretched. U.S. labor market showed signs of weakness, unemployment rose to 4.4%, a 4-year high, despite headline job gains. Despite the initial market correction, U.S. stocks rebounded sharply yesterday, with the Dow Jones Industrial Average closing nearly 500 points higher, plus 1.1%, the S&P 500 up 1%, and the Nasdaq gaining 0.9%. Despite this late rally, all 3 indexes still ended the week lower due to heavy selling in tech stocks earlier in the week. Optimism surged after New York Fed President John Williams signaled support for a near-term interest rate cut, raising market expectations of a December Fed move. The CME FedWatch tool is now indicating that the Federal Reserve will likely cut interest rates this December with a possibility of 71%, which is much higher than 44% just 1 week ago on November 14th. Now let's review my current holdings. I'm not adding new shares this month since I've already invested over $14,000 during the first 2 years of this challenge. Going forward, I'm sticking to my plan of approximately $7,000 in annual investments. In my Roth IRA, I'm holding 354 shares at an average cost of $24.71. The current value is approximately $11,320 with unrealized gains of about $2,570, which is a 29% return. My individual taxable account holds 525 shares with a current market value of approximately $16,780. Combined, that's 879 total shares worth about $28,100, significantly down from last month's $35,400. My game plan hasn't changed. For the Roth IRA, I can take profits at 30% plus gains to maximize tax-free growth. However, with SOXL's potential to hit $60 plus, I'm holding tight for now. For the taxable account, I'm diamond handing until we see SOXL above $60. Long term, I want to funnel all future investments through the Roth IRA for maximum tax efficiency. One viewer recently asked what the SOXL surge strategy is. I coined the term SOXL surge strategy based on SOXL's long-term behavior, which reflects the semiconductor sector's pronounced business cycles. It's essentially a long-term swing approach tied to SOX's trends. One example, buying SOXL under $25, ideally closer to $10, and selling above $60. Since SOX's long-term behavior is a moving target, these levels can shift. For instance, in this cycle I may sell above $70 instead of $60. My core philosophy remains the same. Based on the SOXL surge strategy, I will buy SOXL under $25, preferably around $10, and sell above $60, and preferably above $70. Looking at the historical pattern, we see major dips every 2 to 3 years. We had $4.33 in March 2020, $6.21 in October 2022, and $7.23 in April 2025. Similarly, we see peaks every 2 to 3 years with $74 in December 2021 and $70 in July 2024. As you can see here, the bottom prices are going up, from $4.33 in 2020, $6.21 in 2022, to $7.23 in 2025. So, the next bottom price will be around $10 in the next cycle. This isn't about perfect timing, it's about capitalizing on SOXL's inherent volatility while maintaining strict risk management. I completely avoid margin trading to keep things conservative. Despite the volatility we've experienced, my conviction in semiconductors remains rock solid. AI, cloud computing, and high-performance computing are still in the early innings of a massive transformation. SOXL has historically delivered outsized returns during bull cycles, and I believe we're still in the early phases of this current cycle. Patient investors who stay disciplined through the inevitable ups and downs will likely be rewarded with substantial long-term capital appreciation. That's your November 2025 SOXL Challenge update. While volatility is always part of the game, the long-term wealth-building opportunity remains intact. This challenge is about patience, discipline, and maintaining that long-term vision. We're in this for the marathon, not the sprint. If this update added value for you, smash that like button, hit subscribe for monthly updates, and drop your thoughts in the comments. Your engagement keeps this community strong and growing. Stay disciplined, stay patient, and keep building that wealth mindset. I'll catch you next month with another update. Peace out, SOXL family.